Hello, hello. Welcome back to the Trading Triangle once again on Sunday, the 30th of March. How you doing, Kaye?
I'm doing great, man. So today's the last day, or maybe not, the second last day for the first quarter to end. So pretty exciting.
Yeah, so tomorrow's the last trading day of the first quarter, so that'd be interesting to see what happens there. Nice and sunny here in the UK. I've actually had to close the curtains. It's so sunny, so you can actually see me. I first jumped on the stream and Kaye was like, "Where are you?" But here I am. Awesome. Obviously, we are just a couple of guys on the internet talking about stocks and looking at charts and giving our trading perspectives. So, of course, it's not financial advice. That's what we say every week because it's not financial advice. We just like doing it. If you take value from it, then that's fantastic. Obviously, give us a follow on Trading Triangle on YouTube as well. And obviously our own accounts, which you can see on the screen there, are for X as well. Obviously, a huge big thank you to Wolf as well for let's use a platform. We really, really appreciate it. Couldn't do it without you. And lastly, make sure you put your ticker request in the comments. We'd love to see what you're looking at. Obviously, the market's been a bit tricky this week. And this last week, it started out really nicely, but we took a bit of a downturn, but we'll jump into that in a second. But yeah, stick your tickers in the comments. We'd love to see them so we get a few trade ideas, etc., etc. Right, let's jump into the slideshow, okay?
Let's do this. And I think we have folks from Paris, France. Bonjour.
Oh, we've got a couple. Yeah, we've got Joseph here. Let's go indeed. Bonjour, Pinal Julien. I hope that. I love that name, Julien. Dubai as well. Fantastic, awesome. And yeah, we've got a couple more requests coming in there as well. So keep them coming through. Hopefully we can get to them all. Obviously we do kind of speed through our section, but yeah, let me just change the layout there slightly so you can see. There we go. Awesome. Right, let's jump in. So last week it was a bit of a red week. Apple actually doing pretty well considering you went a little bit short on them last weekend.
Well, but I would have to say that I did mention I'm looking at a long-term swing trade, which is still in the downside. It's not like Apple is think about this. If you're buying Apple and not buying anything else, it doesn't make any sense to me from an investing or trading standpoint, because where's the revenue, right? Where there's no growth right now.
No. If we go back here, obviously we've got a bit of a red week, of course, but we do have Tesla as well, up 12%, which is a bit of a surprise given the amount of sentiment change. But they were down quite heavily before that and in the weeks prior to that. Just on top of that, you've got AMD down there 2%, which is not too bad actually for them. Normally they follow the market quite strongly, so showing a bit of strength there. And Palantir completely flat on the week, so I think I win that one as well. Technically, because last week I picked Palantir, you picked Apple.
Yeah, you won the second week in a row. You won second week in a row, yeah.
We'll see what happens this week, won't we?
and one stock that you can't see here got basically trashed was Lululemon after the reported earnings. So
yes, indeed.
That was pretty sad for them.
Do we know why that is? I didn't actually see that.
It was soft guidance. So they came out pretty well, but the guidance is soft. Consumer confidence. I mean, if you sell consumer goods and consumer confidence is low, it doesn't sound great that you'll be doing very well at least in the next quarter.
No, it doesn't sound good at all. Moving on, obviously we've got the fear and greed index. We're back down into the extreme fear. We did come up into fear ever so slightly. I think we actually did a previous close, so we kind of went into fear throughout the beginning parts of the week and then ended the week in extreme fear around 22. What would be a week ago? 25 last week, so we're right on the brink at the end of last Sunday. Obviously, going through this list here, maybe I'll let you do that actually. Talk through this list on the side here.
Yeah, absolutely. So put to call remains pretty standard. We were, I think, 0.8 last week. Now we are 0.79. So that rate, there is no substantial value in that. The fear remains the same. From a WIG standpoint, we were trading around the 18, 17.8. 18.1 was the range, and now we are 21.65. We'll touch upon that a little bit later, why it's happening. SPY, we were down 2.82%, especially the last day. Friday was a pretty brutal day in the market, and that basically took it out. Of course, every time SPY is down 2+%, QQQ will be down even higher. Guess what? All the Max 7 is basically getting thrashed basically by the market. Same thing we saw with the small caps. And the key event basically for next week, I know there are other companies reporting earnings that are insignificant, but it's going to be the Liberation Day, so-called, the reciprocal tariff day announcement that will come. And I think most of the conversation is happening on the uncertainty aspect of this, right? They announced the auto tariff. You saw the reaction for GM and Ford. especially all the car companies. I mean, so far they're saying Tesla is in a better position along with a couple others like Lucid and Rivian, but they are much smaller players in the market. They're not going to move the market. So Tesla is the most advantageous position, but still they still have to source aluminum and steel and all that for the body of the car. So it's going to impact their margins as well. But I think for other car companies, it's going to be a bigger problem, a bigger headache. What are your thoughts on the Liberation Day?
Well, I mean, it's going to be volatile for sure, and I think it's going to be a day trader's dream. To be honest with you, so from a trading perspective, in terms of actual logical perspective, I think you covered it quite well there. Obviously, Liberation Day, we don't have it over here, so it's a bit different for us. But it'll be interesting to see what happens, especially linked with the tariffs. But yeah, what were you laughing for?
Yeah, so we got a couple comments. I think Skills is asking, kindly talk about Google. So I'm covering Google as part of my stock for the week. So just hold on to that. And then I'm take a request as you are posting it in the chat.
And then message from Finexcel as well. Obviously, the tariff from market's way too volatile, man. Yeah, way too volatile is definitely a good way to look at it. If you don't find volatility very appealing, just switch off for a couple of weeks and come back in a couple of weeks and see where the market is and reevaluate your positions and maybe start a couple of new ones. It's up to you. For me personally, I like volatility. I spoke about it last week on my X channel, X profile. Do people call it X channel? No, probably not.
They call it
X on my X. There you go. I was speaking about volatility and how much I love it. I don't always get a chance to obviously trade because obviously job and life and all that kind of stuff. But when I do like volatility, as long as you have those kind of levels in mind and obviously keep to your strategy and risk management, you're doing pretty well. Anyway, should we move on? Earnings. Not a lot really to say here.
Nothing is happening.
Should we move on already then?
Let's move on. Yes, nothing burger at this point in time.
No, yeah. But when does the new earnings season start? Must be a couple of weeks.
I think in 2 weeks or so. I think, let me see, when is Delta going to report on? Generally, Delta is always the first one to report earnings. So let's see.
We're getting quite a lot of requests today, which is pretty good. So we'll get through our stock picks. I've got CrowdStrike and you've got Google, is that right?
Yeah, I have Google. Yep.
Yeah, so we'll get through those and talk about them. And then we'll get to the audience requests. So do stick around. If you've got them in your queue, you'll probably get to them because we've got enough to really kind of get there for the hour or so. But should we jump into the SPY, okay?
Let's do this.
Yeah, I'll talk to it for this one. Maybe you can take QQQ. Just a few points on the chart here. You've got the pink line down there, which is the kind of line I've had drawn for a few weeks. I actually spoke about that last week, possible downturn in the market. I didn't see, obviously, the positivity kind of going into the beginning of this week, where you can see where my cursor is there. But the turn of Wednesday, we had a bit of a doji candle, and obviously Wednesday, Thursday were quite rough, and then Friday really did break that kind of bear flag there aggressively as well, not just a tiny red candle. It was a big red candle. In this case, obviously yellow. But I want to see it kind of react at 550. I also want to see it break 550 if this is like a real move that people want to see. Yes, we might get a bit of a bounce. We might come back up to kind of maybe this level, 555, maybe 557, and then make another lower low kind of down towards this kind of 544 and then eventually get into 536. Basically, I want it to break down a little bit more. That's what I'm looking for. And that's why I'm not going to be taking any kind of longer term trades for now, not for the plus side, of course.
So
just being cautious, basically.
So right now we are down about 9% from the all-time high of SPY. So if you're saying you're looking at about 535, 536, that will take us to about 12, 13% down from the all-time high. So you're saying you're looking at least another 2 to 3% downside in SPY at least in the coming weeks, I would say.
Yeah, no, definitely. That's what I'm looking for. And the reason I've got the pink line here is actually because this is actually a gap fill. You can't really see it on the screen here because obviously the quality of the stream. And of course, we're not actually zoomed in that much. But there's a tiny little gap there, which is why I've got the pink line there. I'm just drawing it randomly. But that's kind of why I've got that there. But if we do get a bit of a double bounce and things get a bit more exciting, and people kind of anticipate Q3 and Q4 being a bit better for us, then of course we will get a bit of a bounce, of course. And obviously the market is 6 to 9 months forward looking. And obviously I've still got that 582 level drawn there. But for now, it doesn't look great in my opinion. But yeah, any thoughts? Any last thoughts on SPY here? Okay.
I think Monday is again going to be a pretty volatile. It's no point predicting whether it will be up or down. But as of right now, you're seeing the trend is basically uncertainty. So one day you could see a 2% up, next day you could see a 3% down, right? That's probably going to be the trend until we have a clear direction from the administration, what the tariff is going to be, how it's going to proceed. And then the second part of that is first US announces the tariff, and then you will probably have to wait for the reaction from the impacted parties, right? So European Union is going to announce something, Canada is going to announce something. If you're going to put tariffs on India, Japan, they will announce something. China will announce something. So the problem is you're not out of the woods on Wednesday. Wednesday, US announces, probably going into Thursday, Friday again. The other countries will announce, and even Mexico. So keep that in mind. But the other problem is, the other key is, if Trump backs down or he pretends to say, okay, I'm gonna have fewer tariffs on XYZ, you could probably see a rally, right? Um, at this point in time, we could completely see another bounce, but the overall trend is still very negative at this point in time.
It's going to be a nightmare for Forex traders, isn't it?
It's going to be, yeah. And and I think the same thing is happening with QQQ. They are both together, and we can go to QQQ and as well.
Yeah, I mean, with that, we'll jump onto the QQQ now. A bit more of a zoomed out look on this one. It's still a daily chart. Yeah, it's still a daily chart. Obviously, we do have a bit of a breakdown here from that trend line that we saw with SPY.
Yeah.
And similarly, I've drawn a couple of pink lines here, a bit of a zone, if you will. And this is just really big volume at this level of 41. That's a bit more of a drop there. I don't know what the percentage on that is from the top, but it would be a point of interest for me, surely. If you want to have a look at that while I keep talking.
Yeah, I'll keep talking and I'll tell you the exact.
On the other side of that, we do have this trend line which has been set to the downside. So you've obviously got the kind of all-time highs-ish here. And obviously when we come back up and hit the 200 moving average, we've set another little high there. So this trend line could be interesting for the future, maybe a break forward, even if it's just for a short-term kind of relief rally, maybe back up to volume here if we get down to kind of 460, maybe back up to 480, that kind of thing. What was the percentage on that then, Kaye?
We are 13% down from the all-time high.
And if we take it down to 441, what would that be?
441, we would be about 18%. So now you're going into bear territory, right? If you actually go above 20 plus up 20 or above, you'll be in the bear market. And I wouldn't completely take that out of the table. And it could happen.
Oh, of course. I mean, just generally how we've been running since basically November of 23. I mean, it's been pretty much straight up, like a straight up market. But we do have a big technical indicator here. The 50 moving average may be coming through the 200, which indicates possible trend reversal and obviously market trend reversal completely. So it could be a bear market on the way, potentially, or at least briefly. I mean, you might see it for 6 months and then might turn back around again. Obviously, with all the tariffs kind of taking place and all that kind of stuff, and things might be looking better.
Now, there are a couple theories, at least going around on CNBC and other channels, is that there are few analysts that they're predicting April is going to be a much better month compared to what we had in March, because generally April in normal years are generally better for the stock market. So we could see a rally. However, I think until the whole tariff situation kind of settles down and we get back on track, I don't think this is ending anytime soon.
I think April has a very good chance of being better than March anyway, just by looking at the chart. This is basically the start of March up here, and we've come all the way down. So it's almost a whole month of just downside. So, I mean, if we have another whole month of that kind of downside, we're looking at kind of 410, 400, which is obviously very dramatic for the QQQs. Of course, it could happen. Who knows? And I'll be there for it. I'll be trading through that kind of pain. Obviously, myself and my members.
Now, keep in mind, in April, we go back to starting the earnings season, which means now companies are now they have seen the first quarter, they report earnings. It's not about the earnings. It's about what they are going to guide for the remaining 2 quarters. That is going to be the key. So, and that could pull stock. I'm pretty sure if GM and Ford, they will report earnings, they're not going to guide that we are going to beat the earnings, in the coming quarters, if tariff stays in place for 25%.
That's a very good point, actually. Yeah, keep an eye on the earnings coming up for sure.
So earnings season becomes even more important in April, May.
Yeah. One to watch, folks. One to watch. Moving on to my pick of the week, I've got CrowdStrike here. It's a bit more of a longer term pick. I know you said last week that you looked at Apple for the longer term. I've gone for a similar sort of thing here because obviously with the market the way it is, it's hard to pick a stock for 1 week. Although I have been pretty successful, okay, winning the last couple of weeks. But yeah, for this one, I've gone for a bit of a longer term one, and this has got a bit of confidence behind it. Obviously, CrowdStrike is it's a cybersecurity play, of course. On the left side, we've got the weekly chart, and on the right side, we've got the daily chart here. We'll turn to the left side of the screen first. Obviously, we are kind of sitting around 357, but I'm looking actually at the 335 level. If we can get back down to there, which is actually a 6% drop from where we are now down to the bottom, which is obviously not out of the question, especially where the market is in the moment. The reason I like it is because it has respected this 50 moving average for the weekly chart quite nicely, and especially in recent times since kind of October, November of last year, and obviously very briefly in March as well, beginning of the month. Switching to the right side of the chart, obviously you've got the daily chart here. Big rejection off of the 50 moving average, which is fairly normal within charts, and not the most concrete support around 200 moving average, but maybe it will come down there and try and set a higher low. Potentially. So I've got that 335 level, drawn out there. And that's a level of interest for me for further upside going forward, for more of a swing trading potential. And obviously with that, I'd have a stop loss below somewhere around here, kind of 300, of course. But that's my thoughts on a possible trade there for CrowdStrike. Are you looking at CrowdStrike at the moment, or are you just sitting on your hands a little bit?
No, right now I'm sitting on my hands for CrowdStrike, but let me see when their earnings are coming up. I think I might do an earnings play 310. So up 310 has already passed. I don't know why they haven't updated the earnings here.
They won't have released it yet, will they? It'll be somewhere.
I'm assuming probably they reported on 3.4, so should be around 6.10. Maybe I think Seeking Alpha has it wrong on the website. So around June timeframe. By the way, we have 31 down revisions for next quarter for CrowdStrike. So as we get closer to the earnings, we might be able to play the earnings. But this is I'm definitely keeping an eye on my main watch list. I generally trade, but I'm not trading right now for CrowdStrike.
No, interesting. Yeah, so I hope that helps. I think someone actually mentioned it. I think it was Man Ram right at the beginning, CrowdStrike. So I hope that helps you as well. Obviously, we won't be covering that in the audience request because we just took it here. And that's it for me this week for my pick of the week. Obviously, hopefully, I get a notch under my belt against you this week. That'd be interesting to see. You can follow me on X as well with the ticker, obviously, SeanTrades_ and YouTube as well. And then you can join the trading community as well, which I've got a new trade which went live on Friday, which I'm pretty excited about, I must admit. And I'm now live trading every Thursday evening. So if you want to come and join my trading live, then you can do that. Obviously, with the link in my X profile, you can see that there. Right, what's your pick of the week, Kaye?
Well, my pick of the week is going to be Google, and I believe Skills asked for this ticker as well. So Google is at a very, very critical crossroad, and let me just zoom in a little bit. So right now, I think what we are seeing with Google is it's sitting at a very, very interesting point and a very critical support level, which is the 154.99. I would say about 155 is the real support. So if that breaks, and most likely it might be the one that's going to break, there are a couple levels that you should watch. So 142.90 is your 38.2 level on the fib. That is going to be a very, very important level to watch, because if that breaks, we get to the 139 level, which is the key psychological support for this particular stock. And then the golden zone would be around the 135.42, which is over there as well. So right now, what we are seeing, at least from the chart, is that it is trading below its 50-day, all the moving averages. And I think if we add a 300-day moving average, is probably very close to there as well. So you should definitely, if you have this in a long-term position, this is something you should start to nibble if you haven't started nibbling in. I really think from a swing position, there are 3 trade ideas that I have actually published on my Substack, so you can go and read on those 3 trade ideas, but mostly there are bearish trades. There is only one trade that I think you could play on the upside, but for that it needs to a clean breakout, and I'll give you the level as well. it needs to break the 177 182 resistance before you enter that trade. Otherwise, you can mostly trade the bearish trades on the weekly basis or on the monthly basis. The example I have shown in my article is for April 19th expiration. You can try that. But again, I'm not giving you any premiums right now because the premiums change all the time as the market opens. So whenever you're looking at, but at this point in time, there is bearish momentum, on the stock, and we could see a short-term bounce. But I think right now it's not looking likely that we will go back to the all-time high anytime soon.
Yeah, that 50 moving average is coming down aggressively, isn't it?
Yeah.
It doesn't look good at all for the short term, I guess. But the one thing I would say on the positive side, obviously, me being me, you've got obviously lower price action recently at kind of 156, and it was kind of started around kind of maybe 165. But on the RSI down here, which you actually can't see, let me change up the screen a little bit. Down here, we've got the RSI. The lowest RSI is probably about 25, I reckon that probably is. If we do kind of make a bit of a bottom here, that's an RSI divergence, and that's often a positive kind of indication for maybe a trend reversal, at least a short-term trend reversal to the upside. So I'll be watching that for sure this week. So I think I'm going to write that one down, Google.
Yeah.
I'm in it long term, but maybe even just for a short-term kind of weekly trade, if that was to play out, of course. Definitely something I'd be looking for. But yeah, the inversion is definitely there. I wish I could draw some lines on the screen, but I can't. Maybe we can do it in the audience request. But yeah,
on the trading view. So I'm just looking at the RSI. How long in the previous historically we have stayed below or above. So generally, Google, once they are overbought or oversold, at least going back to 2021 2022 data, they could stay there anywhere between 3 and 7 8 trading days. So right now we are still not oversold on the RSI, so we could still see some further decline, downward pressure, and it could stay there for a couple trading days before it comes back up. So we might as well get one of those levels retested, because if you look at the volume shelf, there is the volume, there's not much volume going at 140 to 90. This is the volume shelf which is around the golden pocket, right, where 139 135, that's where the big volume shelf sits. So that would be, if we continue to see a decline, that is where I would love to see the stock hold support. Could it break? Yes, but that's where most of the trading is going to happen at this point in time.
So I think Google definitely needs to find its footing somewhere for sure. It's just where investors think I might do that.
Just because of the general market trend, right? It's not just the Google. And if you look at all the Max 7s and the percentage they have declined, I think most of the, apart from Meta, which is in I think less than 5%, most of the Max 7, I think NVIDIA, not Meta, Microsoft, Google, they're in the 12 to 18 range. And then Tesla, of course, is above 30% since the start of the year to date.
Yeah. It'd be interesting to see. Maybe I can get it up while we're talking a bit later on. You can do the year to date.
Yeah, I'll do. Yeah,
performances.
Yep.
And I can just drag onto the screen. I'll use FinViz or something.
Okay.
But I think Google, I mean, it's a very interesting chart to look at. Obviously, lots of things to kind of take from it. And I hope our kind of perspectives and anything like that maybe gave you a bit of value. If it did, obviously do subscribe to our YouTube channel. I don't really plug that enough, or even at all. I don't think I ever say it. Do we? We don't really say it, do we?
Sorry, what? I was reading the comments here.
Subscribe to Trading Triangle. I just put it on the screen.
Yeah, exactly.
I never say it. If you do take our opinions and perspectives, there's a bit of value, then obviously do go ahead and do that. But yeah, no, awesome pick, Kaye. Where can we find you?
Well, you can find me on X, where I post very often, probably daily. I'll go with the Substack first. So I did post this Google chart and the trading ideas. So definitely go check that out and subscribe. And then, of course, I did post a SoFi video, which if you're interested in SoFi trading ideas, you can go check that out on the YouTube as well. So those are the 3 channels you can find me.
Awesome. Always great value here on X there. I like the way you do your tweets. You can make it nice and easy to kind of understand them. So yeah, if you're not already, then obviously do follow Kaye on X. It's Invest Kaye. You can see it on the screen actually, right in the middle, next to his face. Right, I'll get ready to get the charts up. If you can get the list ready, that'd be fantastic.
Yes, the list is ready, and the first one will be NU, New Holdings.
New holdings. Haven't had that one for a little while. I
Yeah.
think last time we looked at it, it was looking pretty rough. So let's have a look.
This is the weekly or daily?
This is the SPY, but it's currently loading.
Oh, I see.
The internet, because I'm in like a spare room in the dark corner of the flat. There's,
I see.
so this is new holdings. It's the fintech for South America, I believe, top of my head. Obviously, a big gap down last earnings, not doing so well. Had a bit of a bounce actually, nice reaction in that zone which I drew last time we obviously spoke about it, which might have been maybe I don't know when that would have been, but maybe around this sort of area. Coming back into that zone, so you kind of want it to react again, maybe in between this. Let's have a look. Maybe just $10 to $10.50, somewhere in between there. I don't know who brought this one up, but maybe they are a fintech investor, perhaps.
Manram.
Manram, yes, a regular viewer. We do appreciate a regular viewer, of course. Long-term chart-wise, bit of a head and shoulders kind of playing out. Let me get the moving averages. I think we actually had a question related to moving average recently. So where was that? What were the MA's parameters? So I used the 50, the 200, and the 20. You can see on the screen, I'm adjusting them now. The 200 doesn't exist on this because it hasn't been 200 weeks of inception, but that would be the red line. The 50 moving average is the white line, and the 20 is the blue line there. I don't normally use 20 too much, but it's always there. It's always handy to have. Anyway, I'm rambling a little bit. Have you found anything on new holdings?
Yes. So basically, the last earnings, they did miss the revenue by a pretty wide margin of 183 million. The upcoming earnings will be on 5/13, and we have two downward revisions. So interestingly, they have the miss on the revenue was 2 quarters ago was 3.38 millions, and then they lost second quarter, the previous quarter, 183 million. So that's a very big wide margin of a miss that they had, especially when you are only generating $3 billion in revenue. Now, I don't follow the company that closely, so I don't know why they missed it. So maybe Manram, if you're following the company, maybe you might have a better idea why they are having this big margin miss. But that's concerning, right? 2 quarters in a row, they have missed the revenue. And I don't know if they have guided soft. They still have a buy rating from Wall Street, so that hasn't changed. But the valuation and other factors, that profitability, momentum, revisions are still not up to the mark. Short interest is pretty low, 3.61, so there's not much chances of a short squeeze happening or the stock price going up crazy, but it's still like a $50 billion company. It's not a small company to sneeze at.
No, and heading back to the chart, I've drawn the zone out a bit, a bit clearer for people to see in between kind of 10 and 10.50, as I mentioned before. But two possible outgoings, obviously this one to the upside, coming back up to these recent peaks, and also to the downside as well. If we continue going down, if we do break this low, which looks more than possible at the moment, then retreating back down to the $8 level looks likely, from my opinion. What's the next one? Okay.
Next is Snowflake.
Snowflake. Oh yes, this is one of yours.
Yeah, I mean, Snowflake beautifully is heading down to fill that gap between 137 to 145. I'll basically wait for Snowflake to fill that gap. There is absolutely no indication in the current market that we will see Snowflake actually going and filling the gap above the 195 and 250.
Yeah.
So since that's not going to happen anytime soon, or at least doesn't look likely, let's wait for the Snowflake to fill that gap. And for the long-term position, because I also have a long-term position, I will only add once we have the gap fill completed.
So no part of you wants to add at the 200 moving average / trend line.
No, because they are very close to the gap fill. So I could add at this level. I could also wait for the gap fill to complete. And actually, the 200-day moving average is actually middle of the gap fill, the 142 level.
Yeah.
So I would not be surprised if actually it breaks the 200-day moving average. And let me see, when is the earnings is coming up on. they're saying it's 321. 321 is already passed. So Seeking Alpha needs to fix the
21st of May I've got.
21st of May. That's probably the one. So we have a couple months to go for the earnings. They do have a solid 20 up revisions. But in this market, and this is what I mentioned in the SaaS space, right? If you continue to have these tariff wars, it doesn't just impact the manufacturing companies, it starts to impact other companies, because then they will hold off on spending on products and services they would buy in general, right? They need to save, preserve cash. That's going to impact the SaaS companies, because they rely on a B2B business model here. Like, for example, GM, Ford are companies that will probably buy softwares from Snowflake and other companies like these, right? So if they have to hold cash or hoard cash, they are not going to be spending money on their IT products or increasing licenses. So it becomes difficult to not just get new customers, but also to expand within existing customers.
Exactly. Do you think that's been taking place for a while now?
Well, SaaS has been hit since 2021, 2022, where companies had been pulling back. But they were on the path of recovery in 2024, when we were very positive and we were upbeat that SaaS probably is going to start recovering as the whole industry in general. But again, we are back into the uncertainty. And when you have uncertainty in the business, they pull back. They will wait for the maybe as close to the year finishing before making those decisions, right? Because you could have layoffs, but before any company that decides to lay off people, they will first cut their spending down on IT products. That's generally that how it happens in companies. They're not just going to go and fire people, right? They will first see how can we reduce cost, and the best way to do that is cut on software cost.
Yeah. And you're seeing that reflected.
Yeah.
Awesome. Should we move on to the next one?
Okay, next one is BND. I don't know this one. BND.
BND? Or
It's a bond market index ETF.
interesting. We haven't had that one before. When it eventually loads, I'll have a look at it. There we go. Need to get better internet by the looks of it. So we have it. I mean, I don't trade this. I probably won't trade it for a while, just because of this dramatic price action on the screen is literally only 5% worth. 5% downside on the maximum side. So even from the bottom to where we are now, I mean, it's good if you've got a ton of cash sitting on the sidelines and you wanted to put it in somewhere. This is obviously bonds. That's where it becomes attractive, or treasuries, etc. But yeah, it's not a fast enough mover for me. I'm a bit more of an active trader in that sense. Are you the same as well, Kaye, or do you invest in bonds as well? I know a lot of them are retirement funds. But
I do have a 20-year treasury TLT where I invest in, but that's more for long-term perspective and also take advantage of. I think the reason probably the viewer asked, or the audience asked this question, is because I think in generally the theory is that the administration is trying to get people into invest more into bond, like get the money out from the equity and put it in the bond market. That's the generally I'm hearing on CNBC, at least from the experts. Maybe that's the reason, but again, this is not a trade. I wouldn't be trading at least this one. Like if you can look at TLT, that might be a better trading opportunity for you. The 20-year treasury bond, TLT, yeah. That is if you want to trade it, you can probably trade it, but I'm mostly looking to, I just keep buying it on dips and keep adding to my long-term portfolio. But the idea is that once the yield comes down, you will start to see the price rise for TLT, and that is what the goal is for the administration, right? To get into the bond market, move the money into the bond market as much as they can.
Yeah, so the bond market kind of decreasing since 2023.
Yeah, and also I'm not a big expert on bond side. It's I don't trade bond. You probably will find other channels that specializes in bond trading. You will probably find better inputs from them on the bond side.
Yeah, we're not going to start diving into stuff we don't want to talk or don't.
We're not educated enough on the bond side to comment on. So, all right. I think next one is our Mag 7 Meta. Yeah, I mean, I would say Meta, if you are a long-term investor sitting at a very nice spot right above the
Yeah.
200-day SMA, right? That's great. I This stock has actually held pretty well compared to the other stocks in the Max 7 category. From the top
I
all-time
think
high, we are down 21%.
I think it's because this one ran up so much before, so it ran up more than Google,
Yeah.
more than Amazon, that this kind of drop, although it is dramatic, it doesn't look as bad in the long
Yeah.
run.
I mean, year to date, this stock is down only 1.5%.
Exactly. Whereas compared to other stocks, it's probably the best performer, right, out of the
It
Mag
is the
7.
best performer
Yeah.
in your portfolio.
But yeah, like you said, I mean, adding here is not too bad for the longer term perspective, but trading it will be tricky. For me, I've got the zone drawn already on this chart between 566 and 595. So what I would like to see is kind of come out of that zone, and then I can trade it out of that zone, if that makes sense. So I'll just draw a couple of squiggly lines. And if it came out of this 595 sometime soon, just come out a little bit of a bounce and move higher. Same to the downside, like that. So just a really clear, simple retest and move in either direction. Doesn't matter which one.
Yeah.
But I don't trade Meta too much, but I do keep my eye on it. Yeah, I do keep my eye on it.
Yeah, and
Sure.
then I think you can if because it's hard to predict the direction right now.
Yeah.
And if you want to pick a direction, of course, you can pick the direction and play that. Otherwise, if you don't want to be and you want to stay neutral, you can probably use a strategy like Iron Condor, where if it goes down, you will still make money as long as it's not beyond the condor that you have selected on the downside or the upside. As long as it stays in that range, you will still make money. So in situations like these, especially stocks like Meta, Iron Condor could be a very good strategy for running a monthly trade on this one.
There you go. Kaye has spoken about possible Iron Condor for Meta. Yeah, it's interesting to see stocks like this. I mean, people will say in a couple of years' time, "Oh, why didn't you buy very clearly at 566 as an example?" And then it's an interesting kind of theory because we're in this situation now. We're uncertain. Donald Trump is kind of doing whatever he wants to do. The inflation's kind of hot and cold, and then you've got just general kind of emotional thoughts around some stocks and your money being in those stocks. The point I'm getting to is the fact that obviously adding to these types of companies and the kind of big tech companies over time has proven to be a decent, unless it's Intel, a decent kind of strategy. So yeah, just keep that in mind. Have a look at the long term. Keep looking back onto the weekly charts and the monthly charts. Don't just look at the daily charts. I guess is what I'm going for. I went for a point there, but I wasn't sure where to go with it. So I hope people took a bit of value from whatever I just said.
I think you hit the nail on the head, right? So question is, if you are investing, the idea is very simple. When you start hitting those 100-day moving averages, 200-day moving average, you can even add a 300-day moving average. Once the good quality companies start hitting those levels, that's when you start adding. It doesn't matter what the market is saying. You add those at those long term moving averages. In general, in long term, your portfolio will be up, because it's not like Meta is finished, right? This is not, every time they will say it's this time it's different. No, it's not different. It's going to go back. Things will be fine. We are just going through this uncertainty phase. Once you have certainty coming in, market will be at an all-time high. And then the problem, what ends up happening with most people's mindset is, you tend to buy at the high because you want the confirmation that the wind has changed. But that's where you need to understand, it's actually pretty straightforward. If you buy at those long-term moving averages, good quality companies, not meme stocks.
Yeah.
With all due respect to, no offense to the meme stocks, but good quality companies, if you buy at those moving averages, your portfolio will remain up in long term. From an investing standpoint, trading, that's a different ball game altogether.
The free cash flow machines.
Yeah, I mean Meta, Google, Amazon, yeah, Max 7. We'll touch Tesla at the end. I have a different theory on that, but let's move on.
Let's move on.
Next is NVDA. Man, this is like it's causing me heartache these days.
NVIDIA I haven't looked at all week actually. One of those stocks that slipped out of my range. I wonder where it's at. 109. Okay, that's interesting.
Yeah. So
Do you want
NVIDIA,
to talk to this one?
well, I don't know what to talk about NVIDIA because it's just getting thrashed. I know that it's not everybody probably knows, NVIDIA, but it's just the challenge of I think what has happened is AI in general, the usefulness of AI, apart from generating meme images, writing emails, you are not seeing companies able to monetize. And the most recent news, I think it was from Microsoft and another big player, it was Amazon or Google, they're pulling back on scaling their data center, or it was Meta, I think, one of those. Microsoft was definitely the one that announced, and there was another one. So if the hyperscalers are going to pull back, think about all the other companies. They are not seeing any benefit of AI, or at least monetized benefit. Even Apple, they haven't been able to monetize anything, right? So that is where the challenge is coming in. I think it's at least for the short term, uh, the rollout of DeepSeek and other AI products from China showed you that, hey, we can do it cheaply. So that definitely has changed the narrative. I think the narrative was changing from last quarter, and if you actually follow the I forget the name of the person. It's on my let me find the name of the person. He was a big Nvidia bull. Let me see. If you go on my profile and you scroll down, Ashwanathan Damodaran, I think that's the guy's name. um I think you should go and follow him and look at his Twitter feed on why he's bearish on Nvidia. He was a big, I think he's a professor in NYU. He has this theory on why Nvidia and the AI trade is not going to play out. And I think you should definitely read that if you're an Nvidia bull. But the crux of the matter is that we are not able to show the monetization impact on businesses when they are spending this much money this fast to scale up.
Is that something you can put in the chat? The link for
Yeah,
that?
I'll have to find it. I'm not able to find on my feed. I've been shit posting a lot lately, so so I need to find where did I post
Yeah,
that.
if you find it, then just stick the link in the chat, and people can have a look at it if they want to.
Yeah, I'll definitely
Yeah,
find. If I can't find it right now, I'll find it where he had that conversation, and I'll post it on my Twitter feed.
awesome. I think going back to the chart, I've had this level drawn between, and it's always been a dramatic one. It's always been one that I've kind of thought it probably won't get there, but it's looking like maybe it will get there. It's between 86 and 95. It's obviously where a lot of volume has been coming in, especially on the weekly and the daily charts, of course. My internet is just really weird at the moment. I'm not too sure what's going on. There we go. The volume's back. But you can see a bit of a rejection off of the 50 moving average on the weekly chart, which is never good to see. Obviously, it's not gospel, of course, but going back to the daily chart, you can see here below the moving averages, I like a lot of kind of Mag 7 stocks. But yeah, lots of volume around this sort of 85 to 95 area. So maybe that's where people might be looking to add long term. I know I am for sure. I'm leaving where it is. It's in no man's land. It's doing whatever it wants to do now. But I think for the long term, 85 to 95 would be good. And until then, I'll just hold my position. So it's not a trade for me. Obviously, it's a long term position. But yeah, Nvidia. That's that covered. What's
Next is VRT.
VRT. We've had this one a few times, I think,
Yes,
recently.
yes, and I forget every single time what they do.
Yeah, can't remember everything. Okay.
Uh,
Again, below 50 and the 200, it looks like I drew a zone at some point as well between 79 and 94. It looks like we're dropping down below that with a couple of gaps as well. I'll zoom in a bit more so people can see a gap created here and a very small gap created here as well in the last week basically. So I don't know the dividend paying company.
they do pay dividend, and their forward dividend rate is yield is 0.2. So it's like the Nvidia and other big players. They don't like, it's not a dividend company. Basically, you're not buying the stock for dividend.
Yeah, it's just nice to have rather
It's
than need
nice
to
to
have.
have. Yeah.
What do they do again?
So
Do
they
you have
are
that
into
information?
they are also, let me read it down. So they, together with the subsidiary, they design, manufacture, and service critical digital infrastructure technologies for data center, communication network, and commercial and industrial environments in US and other parts of the world. They offer AC and DC power management products, switchgear and bus bar products, thermal management products, all that stuff that you require to build data centers and stuff. So I think I have it in my watch list, but I always end up forgetting this one. The short interest is pretty low as well. It's a almost $29 billion market cap company. Their financials are pretty good. They have a net income of 147 million, so it's a profitable company.
I mean, technically, it looks awful at the moment.
Yeah, and they're going to report earnings on 425, which is what, a month from now. And they will be, yeah, I mean, they're guiding a little bit lower on the revenue. So their revenue came out to be 2.35 billion in the previous quarter. They report they are guiding down to 1.94 in the coming quarter. So if they miss that, I think we might see a little bit more downside on this stock. So
Possible RSI divergence, though, means the buyers are coming in, even though the price is going down. So it makes a bit of a possible reversal there going down. It's the only positive I see, basically, on the technical chart. Obviously, lots for it to do. It's broken the support line, which, is not possible. Of course, you can bring that support line down to here. Let's do that now. Which, again, this could act as support as well. So, yeah, I mean, I don't mind it here, actually. But it's hard to buy stocks in this current environment for the upside at the bottom. Doesn't make sense. You're catching falling knives.
and I
Falling knives even.
and I think if, let's say, you want to buy the stock, right, and it's part of your core portfolio, buy and see how the next earning is, because they are clearly guiding down on the revenue, which means that if they are guiding down for the next quarter, are they going to guide down further, below the $2 billion revenue? So if that's going to happen again, you will see retracement on the stock again, unless they blow it out of the market. But here's the problem: like, if you are in the business of data center and hyperscalers are going to pull back on building data centers, that's going to impact your business.
100%.
So, yep. Next is Confluent, CLF.
Thank you for the 4,000 plus viewers. We really appreciate it.
No, sorry, I take it back. It's not Confluent. It's Cleveland Cliffs.
Oh, and which one's that?
CLF is Cleveland Cliffs. Yes.
CLF. Okay. Cleveland Cliffs. I wonder what they do.
I'll tell you what they do.
They're not doing very well. Their last two earnings has not been brilliant.
So they operate a flat rolled steel producer in the US, Canada, and internationally. I think this business. I think you should right now do not trade this, just because I heard the word steel, and with tariff all around us. I think, and especially Canada and steel, those words don't go very well together in this market right now.
No, I mean, from a long term, I know the chart looks a mess at the moment. Hang on. But this is the monthly chart I brought up. You've got a very basic trend line drawn there. Typically, you draw from the blocks. So I'll just readjust that. So maybe people are looking down towards the 672-ish area. That would be interesting to see if they get a bit of a bounce there. Of course, if you see further downside for the steel industry, then you can play that down to that line. If you're feeling really risky, which is another 20% plus, which, everyone's different. Everyone has different trading styles. We like to kind of give our perspectives, and that's my perspective. It's a 20% downside, and you've got lots of volume at this level as well. So interesting to see that, actually.
Yeah,
I won't be trading it myself, but
yeah. The problem is with the trading on these kind of things are like, this is directly in the crosshair of your tariff, right?
Yeah, of course.
The tariff, and you have the steel aluminum tariff, right? So you don't want to put yourself in the probability here where the chances of it going down is much higher. You can probably look in shorting the stock if you like it.
Yeah, so that's what I put down on the screen. The possible short of 20% to the downside. Yeah.
Okay, let's move on to the next one. So I think the couple folks are asking, have you taken a look at Celsius and AMD? So yeah, so we just keep throwing your tickers on the request line, and we'll keep going based on as we get it. So we are on Amazon now.
Amazon.
Yep.
Look at that. This is actually the monthly chart. I'll dive into the weekly chart.
So while you pull that up, let me tell you, Amazon is down year to date 12%.
It's just
So
crazy, isn't it?
Meta was
Give me
down
where it is.
1.5% year to date, and look at Amazon down 12%.
So I've got this level of 184 and 189 drawn out, the zone. It didn't quite reach there a couple of weeks ago. It looks like maybe we're getting a hard rejection off of that 200 level. Maybe we'll come back down and get into that level. And that's, I keep saying level, but this area, the zone, is where I would like to add to my long position and possibly start a swing trade, depending on where the news is at the time. Maybe even just take, a half a position or something like that, just to not have too much size on. I think that's an important thing to mention, especially with all this kind of noise and uncertainty, is to maybe take smaller positions into your trading, just because the volatility is just absolutely crazy at the moment. So yeah, I mean, anyone can tell you that. Any trader can tell you to size down throughout volatility, but people like volatility, like me. Any thoughts on Amazon?
No, I think again, a good quality company overall. I mean, I have not been adding on Amazon yet. I'm basically taking advantage of the Google drop because I want to build both of my position. So I'm just giving more weight to Google as of right now than Amazon.
One thing I would be keen to look at actually for Amazon, and I think you might be looking at this as well. And if I just get rid of us temporarily on the screen, you've got RSI down here. We've set the low recently of 26, which is not amazing. It's not really low. It's nothing too noticeable, but we do have higher momentum here. So if we do come down into the zone and we keep the RSI above this 26 level, that would be very, very interesting for me, for sure. So keeping an eye on that one for sure.
I mean, it's still for me personally, it's down 12%, but it's not like at a level where, oh man, this needs to go into my long term portfolio right away. I need to add more. But
No,
Google
of
is
course.
actually at those levels, so that's the reason. Okay, next up is Tesla. We already covered Google, so we'll skip to Tesla.
Yeah, we covered that in the Kaye section. So if you did miss that, obviously just rewind probably about 20 minutes or so, or catch it in the post recording on YouTube, of which you can obviously go to the Trading Triangle on YouTube and hit subscribe, and we'll be there every weekend for you to have a look at. I'll let you talk about Tesla because I know you've got your theories.
Well, why don't you first tell me about the technical aspect, and then I'll give you. Then we can go into a little bit more on how I feel.
Yeah, of course. So recently, obviously, we filled the gap down here, kind of 10th of March area. We came back down and set a bit of a higher low, so that's interesting. Maybe we could draw a line just quickly through that area. So maybe this could be a point of interest in the coming weeks. Subsequently, we had a bit of a pump up at the beginning of the week. Nice, really big green day. I think it was about 12 or 13% off the top of my head.
Yeah, I think so.
And obviously, we had a bit of a hard rejection off the 200 moving average.
Yep.
All while this is happening, by the way, the 50 moving average is curling down quite aggressively. So we do have to be wary of that. It is related to news. Obviously, Elon's very closely tightened with Trump, and obviously that's a different discussion. It's a bit more political, of course. But it does affect Tesla in certain ways. And I think that's what Kaye's going to be talking about. So I'll hand you over to Kaye for that sort of side. But technically, we're looking a little bit messy. And I'm staying away from Tesla technically at the moment.
And are you looking at that gap that was created between 250 and 256? That's the gap.
There's this one here, yeah. I mean, I am looking at it, but I'm hesitant to trade Tesla at all at the moment. There's much better names out there, especially on the big side, Google, Meta, Amazon, that kind of stuff. Looking a bit more, easier to trade, not necessarily, better to trade, just easier for me in my trading style for sure, especially the daily time frame.
Do you know when they are going to report the delivery number? Should be coming out in week or 2 weeks now, right?
I mean, Tesla deliveries come out on the 2nd or 3rd generally.
2nd, 3rd of the month.
So you'll see it on Wednesday or Thursday, I believe.
Okay.
So they typically come out a couple of days after, yeah.
So another liberation day for Tesla then.
Yeah.
Okay, so I mean, I personally think if the delivery numbers come in line with what they are expecting, I don't even know at this point in time what are we expecting, because when you hear CNBC, they are saying we are going to see bad numbers. You go on X, you hear this is going to be the best quarter of the century or whatever. So at this point in time, I don't even know what they're going to guide for the numbers. I'm assuming it should be lower. If all the news that is fake news as per the side of the aisle, then just wait for the numbers to release at this point in time. I'm with you. I'm actually not touching because most of my stop gaps have been actually filled, unfortunately, because what ends up happening is from the last 2 weeks we are seeing this massive pop-up or massive gap down on Tesla. Like one day we'll have 10-12%, and then for the rest of the week it's basically chopping, and if it's down then it will go back up in few percentage points, and if it's up then it will go down few percentage point, pretty much creating stairway, right? I mean staircase over here. It's still news driven, and I think we will probably see a little bit more leg down, at least for a couple more weeks, until we have that narrative switch going into closer to the robotaxi event. I think that is the what you should be aiming to really profit from on Tesla trading. It's like the euphoria that should build going closer to the robotaxi event.
I think just going back to the delivery numbers and the anticipation of them being lower, and for some time now, I think obviously Europe has said that they're not buying Teslas as much. Obviously, China's got their own vehicles coming in, so the Chinese people tend to buy their own products. I think more so. So I think that's reflected in the chart as well. So you can see that maybe already playing out that narrative of deliveries are not going to be so good, therefore revenues are not going to be so good, therefore the stock has declined. And that on top with Elon Musk doing what Elon Musk does, it's not a good recipe for a positive stock price movement, at least not in the long term. We might see little pops like this, but yeah, of course, it's going to be volatile. It's basically the whole message around Tesla, and that's why it's a bit messy, and that's why I'm not looking at it so much.
So on my X feed or Twitter feed, I posted a video from Forbes that they did this 20-minute segment on Tesla. I think if you're an investor in Tesla, I think you should definitely go watch it. Watch it with an open mind. It's and I think for the China market, which is very important for Tesla, the problem is that in China market you really have to compete with your competitors like BYD and others that we don't even know of. Like we only know of Neo, Li Auto, BYD, and couple others, right? But there are a lot more car companies out there and at a much cheaper price. Also, Toyota and the Korean car companies like Kia and Hyundai, they are also launching cars which are competing at those price levels. So I think what needs to be looked at is the competition, especially in the Chinese market. Whether Europe is going to buy the cars or not, whether Canada is going to buy the cars or not, those will be reflected in the numbers. But I think watching that 20-minute segment on Tesla will definitely help you to have a perspective. I still think things could turn around for the company, but at least it's looking a little bit very dicey, at least moving towards the robotaxi event. And I really think that event has to be executed with 100% perfection. If they have a misstep in that event, I think we are in for a lot of pain in Tesla.
I think especially at the moment, yeah, for sure.
Yeah.
Noel says, thanks guys for covering VRT and CLF. You're very, very welcome. Glad you took a bit of value from that. If you did, great. What's up next, okay?
Next is the AMD.
AMD, okay.
Yeah, I think it was doing pretty well until the recent
lines.
again in 2-3 days back. Yeah, it's
So all these lines do actually mean something. Everything that's green is a gap to the upside, and the red one is a gap to the downside. So personally, I'm looking for this gap to be filled, of course, at 101, let's say. And then we obviously hit a certain bottom here at kind of 94. If we do fill that gap and make a move back up to kind of 108 and 110, that's another little higher low, in my opinion. So that's a positive move for AMD. It's been beaten up for a very long time now. Obviously, you can see that reflected on the screen. Be interesting to see what they say at the next earnings call, which is rumored to be around about 6th of May.
Yeah.
So not too far away. But what I'm really getting at here is the amount of gaps on the screen. There's plenty to fill, and there's more to the upside than there is to the downside, which is, it's interesting.
And I will say this, by the way, if this 94, the yellow line that you have, if that was really the bottom for the stock, and now we are actually in the uptrend of making higher highs, we might still not make higher highs, in a very steep fashion. We might be slower.
Building up.
It will take time, but we have been on a downtrend since March of 2024. Like, we hit the all-time high in March of 2024. It's 1 year, 12 months. The stock has been basically declining. So,
Yeah, very, very depressed stock. What was that acronym for AMD?
advanced money destroyer. That's what it's going these days.
Advanced money destroyer. I think a lot of people have been feeling that in the last 12 months for sure.
Yeah, absolutely.
Should we move on to the last one? Oh no,
the
sorry,
last
carry
one
on.
is Celsius.
You were going to say something, Kaye?
What was I saying? I forgot the thought.
Okay, well, never mind then. We'll move on to Celsius, and that'll be our last stop for the day. Again, we do really appreciate.
Oh, actually,
technical
one
requests.
more after that. It's
Okay.
my MU after that. That's it.
MU.
Yeah.
Sorry, yes, I missed the one from Julian. Awesome. Okay, we'll cover those two then. We'll cover Celsius and MU, and we'll call it a day there.
Yeah.
Celsius. Well, actually, where do I start? I mean, this is the daily chart. We're coming up to the resistance of 200 moving average. Looks like it's really struggling to get through that. Perhaps this could be a bit of a short-term trade. Now, where do I start with this? Obviously, draw a bit of a trend line there. You might have to go down into the smaller time frames for this one, for sure. Maybe I'll dive into this in a bit more detail on my X channel a bit later on. This looks interesting, actually. Are you interested by this immediately or not so much?
No, so I recently closed out a position. I think maybe a couple weeks ago, I closed out a position out of it when we had that massive gap up right after earnings. Right after earnings, or what something they announced?
Yeah, it was earnings. It was earnings. Yeah.
Earnings, right? So mid-February 221 is when they had that massive pop, and I said I'm taking my profits and I am closing my trade. And right now I'm just holding on a holding pattern. I'm not trading this right now.
So you could have that as a potential trade. While Kaye was talking now, is basically just drawing lines and potential what could happen. The reason I like it is because obviously we've got the recent support here of this area, 3450-ish. If we break out of this kind of mini wedge, I guess would be the way to say it. Come up out of it, come back down, retest this sort of area. Again, it's kind of coinciding with the 3450 level, and then hopefully plain sailing all the way to 45.
But
eventually, not straight away.
Yeah, but my concern is that they have been rejected at least 4 times by the 200-day SMA. So unless they have like a very clean breakout and 200 becomes a support, I think I'll personally, for me, that's what I'm waiting for before getting trade.
That's what I mean. So if we can get through that, then that's great. That's why I like it. If we can get through that hard resistance, it means it makes it even stronger support. Essentially, that's what it should do at least. We'll see what happens. Obviously, what happens in future price action. Awesome. I think Celsius will cover quite well there.
Yeah, NAST is MU.
MU, Micron Technology. Here we go. This is more sort of your area. Looks like it's very range bound, to be honest.
Yeah, it's a perfect stock for selling option, but the problem is the range is a little bit too wide. So the range that I have it is 84 to 114, right? But if you want to draw a smaller range, I would say 95 to 84 to 95. That $10 range is when you can probably, if you sell options. That's the range that I would target to sell options on, like doing the wheel strategy on this one.
Yeah, there's a very clear range that's been established in the last 6 months, basically.
Yeah, this is a perfect stock for actually, and you can even look at running iron condors on this one, or credit spreads, right? You can run actually all these spreads right now on this. You can use the 200-day SMA as I guess the call spread, right? That could be the one with maybe a $5 down or something like that. I mean, what I'll do is I'll put a couple trade ideas for MU on my Twitter, what it looks like. But this is a range bound stock. You can definitely do wheel strategy on this one. But it has to be.
Sorry.
But I'm saying it has to be weekly. You don't try a monthly one because we don't know what's going to happen in this market where we are so news driven every day. I am more comfortable running a weekly strategy than a monthly.
I think for me, this level of around about 104, 105, I'll draw a circle so people can see a bit more. And there's a lot of lines on the screen.
Yeah.
But if we can get above this trend line that's been coming down, which I've just kind of manufactured while you've been talking, if we can get above that, then perhaps that might be a good trade to the upside. But that would require a lot of market influence, let's say.
Yeah. I mean, you can definitely look at, I mean, right now, based on how it's trending downwards, you can definitely look at call credit spreads, iron condors, wheel strategy. So there are ways you can trade this particular stock because it's range bound.
Yeah. Awesome. Well, I think we've covered it quite well. We've covered quite a lot of stocks tonight. It's been really, really enjoyable. I've written down quite a few names. So thank you once again for sticking those in there. And we've almost reached 5,000 viewers, which is a new record for us, which is pretty impressive given the market the way it is. Maybe people are looking for more insights, more perspectives, and that's obviously what we provide here. But of course, none of it is financial advice. We just love to do it, etc. We'll go back, we'll take that away, and we'll bring ourselves up here. Obviously, massive thank you to Wolf for us to use the platform. We wouldn't be able to get anywhere near as many viewers without the support of Wolf Financial. Of course, do you want to close out? I'll let you close out the rest of it, perhaps.
No, I think you did a pretty good job. You do the opening, you do the closing. That's fine. But all I'll say is trade safe, guys. Next week, the Liberation Day. I mean, my take is from an investing standpoint is keep your head straight out, buy on those big moving averages, and that's pretty much it. From a trading standpoint, just be careful and size accordingly.
Yeah, I think from a trading point, especially with this volatility at the moment, just make sure. So people often they go let the winners run, etc. But in this market, it's very tricky to do that because it's so choppy. So maybe just take some of the kind of profits and the target prices in a bit of a smaller ranges. So you kind of rack them up in smaller amounts, should I say, rather than going for the big wins, because you're not going to get the big market moves in this market. You will eventually, of course, once everything turns around, whether it be the downside or the upside. That's different. A different story. But yeah, I'm kind of rambling on a little bit. But yeah, just be careful with that and make sure you kind of take every trade for what it is rather than what it can be. If that makes sense.
And all I'll say is that we really appreciate all the folks who are tuned in live, requesting and chatting on the line. So we couldn't do without you guys. So really appreciate that.
Yeah, we actually hit 5,000 just now. So that's a reason to be very, very cheerful. And we'll take that into next week. We'll be back same time next week, 1 p.m. Eastern. We hope to see you then. Take care. Trade safe, everyone. And see you next week, Kaye.
Take care.